Hey everyone, me Kevin here. The S&P 500 has eradicated all of its 2021 gains, just like ARK Invest, which is down over 25% from its peak. Unfortunately, now the market is continuing to get battered.
We want to share our point of view. We do have a point of view on what's going on market-wise. So go into a lot of worries that the market's having right now.
Boy, oh boy, major indices. Here we go. Not looking too hot today. We got the S&P down almost 2%. NASDAQ down almost 3%. I'm rounding. I can't even believe I'm rounding the NASDAQ. 2.5% in the dumpster. Everything, the FTSE, the Nikkei, the everything heading down. And I think we have some more scary things. I don't know what's scary. Me? I'm scary. Here's your bond yield. You break through resistance, that now becomes support, and then you launch from there. That's a little frightening when it comes to the 10-year bond yield. The minute that thing starts moving up, the stock market's like, sell.
This is the end of the first week of March 2021, and I keep hearing about how the market is crashing or headed for a crash, and how the current market environment is very worrisome. So let's look into this a little bit and get into the charts. So first, let's look at Apple, and let's look at what happens, what's happened over the last 4 or 5 weeks. So at the end of January, let's say, January ended about right here, and Apple is down about 8%. And Tesla, I like to talk about Apple and Tesla because these are the ones that everyone's always talking about, the ones where everybody's making a killing. And let's see how Tesla's doing since January, the end of January. It's down 25%. I get the feeling that there's just big panic going on about the market, and it may be mostly tech, which are the growth companies. A lot of people, especially the buy the dip investors, they really like the growth companies. And because they are, big high flyers and the fast money makers, they like them. But these stocks are also the first ones to go down when the market softens. You can see a lot of people, they've been losing a lot of money over the last 4 to 5 weeks. The buy the dip growth investors, they think the market's always going to go up. But if you look at history, 4 out of the last 10 decades have been down. The market's been down, adjusted for inflation. And the market does not always go up. And a lot of people, especially the ones who started investing around, within the last 10 years, they think the market's just going to keep going up, and that's just what it does. And they might just end up losing a lot of money. Would you prefer to be prepared for a down or sideways market? Would you rather have your portfolio prepared for every market environment, like a crash, a sideways, a down market, and then even make money when the market goes higher? To accomplish this, I believe you need to use a very efficient trade structure using options and doing it in a very conservative way. Now let's take a look at my portfolio margin account over the last 5 weeks. You can see that I'm up almost 13%, and my volatility, I don't have any drawdowns. It's not really about how high the percentage is, which, obviously it is, but you have to take into account what happened to the account over that time. Did it draw down a lot? I didn't see any drawdown starting with this point here. So one of the keys is to not have that volatility in your P&L. And ARK Investments, and most likely Meet Kevin, they're most likely down around 25% over these last 4 to 5 weeks. And do you think they need to make 25% to get back to even? No, they need to make around 35% just to get back to even. So controlling drawdowns is one of the keys to properly investing. If you want to plan for or have a system that can handle these types of markets, the ones that we've had in the last 4 to 5 weeks, I really recommend trading options with a very efficient options trading structure. If you're trading properly and follow the 12 principles in my book called The Portfolio for All Markets, and you're using an efficient trade structure like the ones found in Ron Bertino's course, you can not only weather the storm, but you can actually profit in the storm. Now, this portfolio of mine is made up of options on the SPX. It's not options in any other underlying. I don't trade stocks. And I only check this account like once a day for 5 seconds. And occasionally, maybe once every 2 weeks, I need to make a trade and it takes 10 to 15 minutes. And I want something where, I'm not in front of the computer all day and I can live my life and do what I want to do. And a system that's prepared for any kind of market that's going to come my way. So you can see the results I'm getting, and if you're interested in building a portfolio like this, I recommend my book, and even more importantly, I recommend Ron Bertino's course. And I will leave a link in the description for my book, a link for the review I did on Ron Bertino's course, and a link for the actual course. This type of trading will not only give you, time, it also will give you decent returns, and if you take the time to learn and obviously know what you're doing. Of course, I can't make any guarantees, but if you're going to learn about investing and how to invest, why not spend your time going after the things that work? And that's what I would do. And if you do sign up for Ron Bertino's course, using my affiliate link, and you get inside the paywall there, I'll answer any questions you have about what I'm doing with this account. And hey, don't forget to hit that like button on the way out and sign up for my free course.